Are your investment strategies diversified enough? Ever considered international value funds? Let's delve into the world of these unique investment vehicles. One shining example is the Vanguard International Value Fund, also known as VTRIX. This fund is managed by Vanguard, a household name in the investment sphere known for its sound strategies. VTRIX is on a mission to unearth value opportunities in international markets, extending your investment reach beyond domestic confines. The fund's primary objective is long-term capital appreciation. How does it achieve this? It invests in undervalued non-US stocks. By adopting a value-oriented approach, VTRIX hunts for securities that are selling for less than their intrinsic value. In essence, it's about finding bargains in the global marketplace. With its focus on global diversification and a track record of a compound annual growth rate of 5.02%, VTRIX is a compelling option for investors seeking value beyond domestic borders. Scene script: VTRIX is not the only player in the game. Let's explore some of its competitors. First up, we have the LSV Global Value Investor. This fund focuses on achieving capital appreciation by investing in a diversified portfolio of global value stocks. It uses a systematic, quantitative approach to identify undervalued securities on a global scale. With a compound annual growth rate of 6.33% and a standard deviation of 17.17%, it delivers consistent growth with a moderate level of volatility. The positive, Sharpe, and Sortino ratios highlight the fund's robust, risk-adjusted performance. Next, we have the Wasatch Global Value Investor. This fund seeks long-term growth through investments in a diverse portfolio of global equities. It employs an actively managed, growth-oriented approach to identify undervalued stocks with strong growth potential. The fund boasts a compound annual growth rate of 7.25% and a standard deviation of 15.8%, demonstrating a focus on growth with relatively lower volatility. Again, positive Sharpe and Sortino ratios underscore solid risk-adjusted returns. Lastly, the Artisan Global Value Investor Fund targets long-term capital appreciation through investments in global value stocks. It employs a fundamental bottom-up approach to identify undervalued securities with growth potential. The fund exhibits a compound annual growth rate of 7.29% and a standard deviation of 17.04%, combining strong growth with moderate volatility. Yet again, positive Sharpe and Sortino ratios affirm favorable risk-adjusted returns. These funds, like VTRIX, employ a value-oriented approach to identify undervalued securities on a global scale. Each one has its unique strategies and performance metrics. However, it's essential to remember that while these funds offer international exposure and potential for high returns, they also come with their own set of risks and challenges. So, as an investor, it's crucial to balance the potential benefits of international value funds with the inherent risks when choosing the right fund for your portfolio. Remember, in the world of investments, knowledge is power, and understanding your options is the first step towards making an informed decision. Now, how do these international value funds stack up against more mainstream asset classes, such as the S&P 500? Let's delve into the numbers and see what the data tells us. When we look at the performance of the Vanguard International Value Fund and its counterparts against the S&P 500, an interesting narrative unfolds. The S&P 500, a benchmark index of American stocks, has historically outperformed these international value funds. It has delivered consistent and robust returns even amidst the volatile swings of the market. In comparison, the international value funds, though they offer the allure of global diversification, have struggled to match the S&P 500's superior returns. For instance, the S&P 500 has shown remarkable resilience with a lower maximum drawdown, experiencing only a 23% decline. On the other hand, these international funds have seen drawdowns of 27% and even as high as 32%. In the world of investing, every percentage point matters, and this difference in drawdowns can significantly impact an investor's portfolio over the long run. Now let's talk about expense ratios. These are the fees that funds charge their investors, and they can eat into your returns. The S&P 500 index funds have expense ratios in the 0.04% category. That's incredibly low and hard to beat. In contrast, international value funds tend to have higher expense ratios, which means more of your money goes towards fees and less towards your investment. And let's not forget about risk. Vanguard rates its international value fund as a 5 on the risk scale, while the S&P 500 typically sits at a lower level. In the grand scheme of things, these factors, performance, drawdowns, expense ratios, and risk, play a pivotal role in shaping the investment landscape. The S&P 500 has not only delivered superior returns but has also exhibited lower drawdowns. As we peek beyond domestic markets and penetrate into global investment strategies, it becomes evident that the allure of international opportunities may not always outweigh the steady and robust performance found in the comfort of our own domestic market, let alone other benchmarks such as QQQ and technologies, indexes that would have similar volatility profiles represented by these global value funds, but actually realizing returns that make a more compelling case for taking on risk. Time to put things into perspective. International value funds like Vanguard's VTRIX, LSV Global Value Investor, Wasatch Global Value Investor, and Artisan Global Value Investor provide an opportunity to spread your wings beyond domestic markets. They offer diversification and exposure to global markets, which can be a boon in terms of risk management and potential returns. However, it's important to remember that they come with their own set of challenges, including higher volatility and the potential for significant drawdowns. Moreover, while these funds have their own merits, they have historically underperformed against more mainstream asset classes like the S&P 500. The S&P 500 not only offers robust returns but also exhibits resilience with lower drawdowns. Therefore, while the allure of international opportunities can be tempting, investors must weigh these options against the consistent performance of domestic markets. While international value funds offer diversification and exposure to global markets, they have historically underperformed more mainstream asset classes like the S&P 500. As always, investors should carefully consider their investment options and strategies. Thank you and subscribe for more videos like these. And happy hunting.